Hello, today I want to talk to you about a subject that is so important for the U.S. entities and persons, and it has to do with filing transactions with foreign entities or foreign persons. If you invest 10 to 15 minutes of your life, I will show you how to avoid paying 10, 25,000, 50,000, of hundreds of thousands of dollars by sticking to this to the end.
Wow!
There are two basic type of transactions that can cause an individual, person, a U.S. person, or a foreign or a U.S. entity pay minimum $10,000 up to hundreds of thousands of dollars when not reporting foreign transactions. One is via Form 5471, which is a U.S. entity or person that owns 10% or more ownership in a foreign entity. And number two, via Form 5472, when a U.S. entity is owned by 25% or more by a foreign person. Person meaning individual, or foreign entity. Now, let me go deeper into the filing requirements of Type 1, 5471. There are basically 5 categories or sections where a U.S. person needs to be mindful of to prepare or to file the form correctly. Category number 1. Usually that category right now, I'm going to leave it aside because it's almost like it's not that applicable anymore. But category 2 applies to U.S. citizens or residents who are either officers and or directors of a foreign entity. Category 3 applies to U.S. persons. Again, I tell you, a U.S. person means an entity, an individual who acquires, disposes, or changes ownership during the year by 10% of a foreign company. Category 4, it gets deeper, is a U.S. person that somehow controls a foreign corporation, and by control meaning 50% or more, for at least 30 days during the year. I could go deeper into that. I'm not sure if we have enough time now, but I'm just going to give you an idea that it could be either a U.S. just one individual, or the addition of more than one U.S. individual or entity that by adding their percentages together, it goes over 50% ownership in that foreign entity. In category 5, which is basically related to controlled foreign corporations, is a U.S. shareholder of a controlled foreign entity, and it has different subcategories that we don't have time to go deeper here. But basically, there are 5 categories, and depending on the percentages that the U.S. person owns, it's the requirements. Meaning, like if somebody owns 10% or 15% of a foreign company, the requirements are less than when a U.S. person or the addition of more than one own 50%, more than 50%. The requirements will be bigger or more, deeper into the filing requirements. Now, why do we have to file this Form 5471? Well, if it's an individual that owns 10% or more, which, like I said before, 10% or more, or let's say more than 50% ownership in a foreign entity, the individual has to file that form along with their tax return, which is Form 1040, once a year. So every time they file a tax return, normal tax return for their income and expenses and deductions, they have to attach that Form 5471. And when is it due? Again, it's due when the regular tax return of that U.S. person files their tax return. If for any reason the entity that is the reported entity is a U.S. corporation, or let's say a U.S. partnership, they file this Form 5471 along with their proper tax form. Let's say a partnership, 1065. A U.S. corporation files it along with their Form 1120. If it's an S corp that owns a foreign entity 10% or more, they file it along with their Form 1120S, S corporation tax reporting. And their due dates changes when it's a different entity, like a partnership or an S corp. But basically, it follows the due date of an individual tax return and a U.S. corporation or S corporation. Whenever their tax filings are due, we have to file this form. One of the practical points that we need to be aware of is do not wait until tax season comes. Do not wait let me go ahead and file my taxes to think about this. It's important to be mindful and thinking about this. If I go and buy a percentage of a foreign entity, immediately ask your accountant, your CPA, your tax professional about the possible compliance issues that you may have to face to avoid this. Remember that I said 10, 25, $50,000 or more of penalties. By avoiding that, you're saving money. The 5471 penalties could be really, really expensive. Think about it. The initial penalty is $10,000. According to IRS Section Code 638, the minimum penalty is $10,000 per occurrence, meaning per incident. Let me give a little sample. If you have 3 entities that you're supposed to report, it's $10,000 minimum each. And then there's a continuous penalty that if the IRS finds out, if you don't come forward, the IRS finds out, and they send you a notice, and you don't respond, it's $10,000 per 30-day period, capped at $50,000. Remember I mentioned that. So $10,000, but it could be as much as $50,000 per incident, per entity. And then you could have other consequences, like usually when you have you own a foreign entity, whatever percentage you own, you can also claim the foreign tax credit. Meaning, the idea here is the government wants the U.S. residents or citizens to report, comply, whether they pay taxes or not. This necessarily doesn't mean that you have to pay taxes, but if you don't comply, you get penalized heavily. But if for any reason you have to pay taxes on the foreign entity's income sources, you know that you also take whatever tax you pay in that entity, in a foreign country, you can take it as a foreign tax. But if you don't do this, if the IRS catches you before you report it, you may lose a percentage of that foreign tax credit. So that's additional money that you're going to be leaving on the table. And this could be even criminal penalties. Criminal. Criminal is that you could go to jail if you're not reporting this properly every year. Okay, and many years pass by. The IRS finds out, you could go to jail. Let me give an example of a U.S. individual, it could be a corporation, an individual that owns a Colombian SAS, which is similar to a corporation, Colombian holding entity. And that entity owns a Colombian, in this example, OPS, another Colombian corporation, 100%. And then the holding Colombian entity owns 80% of a Mexican entity. It also owns 60% of a Panamanian entity. And that's it. Now, let me tell you that I'm giving an example with a Colombian entity, but this could be, I guess, nowadays Colombia is famous, it's popular, but it could be an Indian company, it could be a company from Spain, it could be from England, it could be from any countries out of the United States. This applies to any individual that owns entities anywhere out of the United States. Now, compliance issues. The U.S. individual, indirectly, he needs to report the holding entity, Colombia, which is one, but indirectly he also needs to report, because indirectly he owns 100% of the Colombian, of the corporation. Indirectly he owns 80% of the Mexican, so 60% of the Panamanian entity, and remember, he owns 10% or more, right there. In some cases he owns 50% or more, foreign control corporation. That individual needs to file 5471 for each of them. We're talking about 4. That's a compliance issue. That does not mean that the U.S. individual has to pay taxes on the incomes of those entities. That's a subject deeper that we'll have to discuss it in another video. Right now, we're going to keep it on the issue that they need to file these entities for them. But they also need to report related transactions between the companies. Within the 45471, they need to report if they have related transactions between the entities. And examples: management fees, royalties, loans, dividends, capital contributions. Now do the math. 4 entities for 3 years. Let's say that you haven't done this, you've been doing this for a while, you didn't know about the law, or you knew, but oh my God, let me not do it, I'm not going to do it now. I don't want to deal with the IRS now. You have 3 years, 4 companies. That is 12 incidents at $10,000. That's $120,000 minimum. Why do I say minimum? Because if the IRS comes and finds out through different sources, it could be $50,000 per incident. So do the math. 50 times 12, that's a lot of money. In another video, maybe later on, there are things that we could do for you if you have an issue like this. Come forward, speak to your CPA, accountant, but if you haven't done it, because probably either your accountant, CPA, or tax attorney hasn't made you aware of this. Give us a call, or call anybody, any professional that deals with this type of transactions. Not every accountant, every tax preparer out there, or every CPA deals with this type of transactions. These are really complex and specific issues that a few accountants, CPAs deal with them on a continuous basis. Now, there's one other reporting requirement that it was not meant to be in this video, but I'm going to add a little bit to it. The reporting of foreign bank accounts, which could be another video, but foreign bank accounts. Now, when an individual owns foreign entities, those entities have bank accounts. And by those entities having bank account, and the individual owner either having that 10% or more, having signature to it, they also need to report the foreign bank accounts with the amounts for each entity for the year. Again, if this is not done, another $10,000 minimum in penalties for not reporting those foreign bank accounts. And that will add to that individual. Maybe that individual also has individual bank accounts in that country or in other countries. That individual needs to report those foreign bank accounts. That's a separate penalty, $10,000 or more. Now, in expanding on the 5471 requirements, not filing a 5471 form is one incident that could cost a $10,000 penalty, or more than $10,000. But not completing it properly could also cost the penalties. So it's not just not filing it, but not completing it properly could be filing. And obviously, incomplete records, ownership, balance sheet items, income and expenses, foreign taxes paid, all those related, they need to be reported properly. And again, like I said before, not every accountant and CPA deals with the type of issues, foreign related issues. There's also some of the forms that need to be filed, like the guilty, maybe depending on the country and on the taxes, there may be a tax to be paid here by the U.S. person. Usually when a country has a lower tax rate than the United States, they may have to pay taxes on it. They may have to report dividends. And then obviously they also have foreign tax rates to account for. The books, the financial records, they need to be done properly by the foreign entities accountants, so that we can use that information and properly report it in the U.S. tax form. Missing international information can keep the assessment period open for related items. Now, not everything is bad news. There's a way around it to minimize these penalties. If not to zero, at least to minimize it. Remember in the previous example, 4 incidents, $120,000 or more in penalties. We can help you reduce those penalties, if not to zero. The idea will be to reduce them to zero by proactively acting into this, not leaving these things for years to pass by. But if you happen to know somebody that has that situation, they can come to us and we can help them reduce that penalty to the minimum. There's still an open amnesty by the IRS that they're about to close at any time. So you need to act soon, act quickly, and either call your accountant, ask him, your CPA, and if not, we're here to help, so that we can file the amnesty. You can put you into the amnesty program and be able to reduce those penalties. And now, I want to take the opportunity now to ask you to please smash the like and subscribe button so that more people out there can benefit from this information. Okay, so now we're going to be talking about the other type of reporting foreign transactions, which is via the form 5472. 5472 basically applies to U.S. entities, let's say U.S. corporations to be more specific, that have foreign partners, or foreign shareholders, 25% or more in the company. So a foreign entity or an individual owns 25% or more of that U.S. corporation. And then there's also, lately since 2017, with the new law that came up in 2017, that started requiring the single-owned LLCs. And let me explain a little bit more. An LLC before when owned by a foreign person or individual, was not required to file any forms if they didn't have any activities connected to a U.S. trade or business. Okay, there were entities that were just created by foreign individuals that own investments, houses, properties, any other investment that it was deemed to be not an activity connected to a U.S. trade or business. But the IRS, the government, noticed that they needed to close a loophole there and started forcing LLCs, single owned by an individual, to report this entity via the 5472. And there's no income and expenses to report. There's only a form that needs to be filed, and it's filed via the main form 1120. Now, this is very important because there's a lot of people out there that may not know that if they don't file that form yearly, they're going to get a minimum of $25,000 penalty and more. You know, once you go over 1 year or more, this could be a substantial penalty amount. Okay. In addition to this reporting requirement, it's not just reporting the 25% shareholder. This shareholder may have other either entities or individuals that may be called related parties, related transactions, and this could cause the U.S. entity to be forced to report other activities with other entities that are in a foreign country. It could be in the United States. It could be any other place that they will have activities connected with this U.S. entity. All these, if not done correctly, because it's not just failing to report the form, and if you don't report it correctly, you could be forced to pay this $25,000 minimum penalty. Yeah, there's a lot more that goes into reporting in these forms 5472, which I'm not going to be able to go into more depth here in this video. But just to give an example, what counts as reportable transactions? You know, capital contributions by the owners, loans, advances, and management fees between related entities, between the company that owns 25% or more, or the person and the U.S. entity, rents, royalties, any transactions really in the course of business, purchases, cost sharing, and reimbursements. Now, when are these forms due? When do you have to report this form? Similar to the 5471, the 5472, which is part of U.S. corporation, needs to be reported when the 1120 tax return is due, normally April 15th, if it's a calendar year-end tax return. If it was a different fiscal year-end, it would be within the deadline due date of the 1120. Very important that I didn't say before. Reporting accounting records, good accounting records must be done, even if you have a single owned LLC by a foreign person. Usually when you have a foreign person, only one owning an LLC, there's only a form to be completed, 5472. There's some other little forms, items to be completed on the form 1120, and there's no sales or deductions or expenses that are reported on that form. But that doesn't mean, and I have noticed this, I've seen this during the years of my accounting career, that persons do not keep track of these properly accounting records. If the IRS were to audit, were to check and pull this entity to an audit, they're gonna request those accounting records, and they need to be done properly. This is not like I don't have to report anything, so I don't have to do any accounting. Yes, you have to, because the minute that you don't, and the IRS checks, and these transactions are deemed to be connected with a U.S. trade or business, you're gonna have to pay not just the penalties, but the taxes without expenses or without deductions. So it's very important to keep good accounting records. We have had cases where we tell our clients, look, we need to be involved and we need to see good accounting records. And even if another accountant out of the country is doing the accounting, we need to review it. We need to check and make sure that they're done properly according to the U.S. tax regulations. Now, the penalties. The penalties for not reporting this activity, this foreign persons. Minimum initial penalty of $25,000 for failure not to complete. This is not just not to complete the form, not to complete and maintain required records. And keep in mind, if the IRS were to send you a notice because they found out somehow, somewhere, that you have not reported this form, after you receive the notice, you get an additional $25,000 penalty per each 30-day period. That means per month up to there's no limit, $25,000. Now this is drastic penalties. There's no maximum compared to the 5471 that there's a max or cap of $50,000 per incident. There's no limit right here. Now, failure to document related party transactions can be more dangerous than the transaction itself. Keep that in mind. Keep that in mind. Very important. Failure to document related party transactions can be more dangerous than the transaction itself. As you see in this example that I'm providing here, 3 non-U.S. family members, that means foreign, own a U.S. real estate LLC, a Florida operating corporation, a Delaware holding company, and a U.S. designated LLC. U.S. designated means is one owner owning that LLC. Okay? What do you need to report? First question. Well, most likely you have to report the four entities by the foreign persons. And that means is 4 entities times, let's say it's 2 years that you did not file. Well, 4 times 2, it's 8 times $25,000, $200,000 initial exposure before continuation penalties. $200,000. This is very important to be always aware that if you do any transactions with foreign individuals or persons or related transactions, that you say, well, do I need to report? Do I need to comply? Let me find out with my CPA, what am I missing here? This is very important. So basically, to summarize, on the potential $25,000 penalty, you have to keep good records, like I said before. What must be captured in the work papers? Well, who owns it? Who are the owners? Proper identification of the owners, their addresses, the percentages, the transactions. Again, good accounting records, capital contributions, loans, interest, services, etc. Entity by entity filing. Don't assume that this is 154.72 is going to cover all the entities or the group. No, each one is independent. Domestic DE trap, meaning a foreign-owned U.S. LLC by one foreign individual, make you believe that you don't have to do anything. Yes, you do. $25,000 penalty, even if that LLC just owns one property, one investment that doesn't have any activity. No, I'm not making any money. No, you have to file a 5472, otherwise you get $25,000 penalty. And the record keeping again before, it has to be sufficient. Just a late filing, an incomplete or unsupported filing will trigger the $25,000 penalty. So be aware, be mindful, ask your CPA. If not, we're here to help. Okay, now, normally an example of what, summary of what we usually do and what proper CPA will do, and from moving from reactive to proactive, because, instead of being reactive to this, we want to be proactive. And here in this slide, I'm showing you what we do. Map, we identify the owners, the entities, the countries, classify them, whether it's controlled foreign corporations, less than 25% owned, disregarded entities, related parties. We gather the information, the books, the bank statements, the documents to be able to keep a good accounting records, and then we file and retain. We keep these records for 7 years, just in case the IRS will come and audit and ask for information that we have, that we can support and substantiate in front of the IRS. If you have invested your time up to this point, do yourself a favor, give us a like and subscribe to the channel. And if you have any doubts or questions, throw us a message in the chat and we'll try to respond as soon as possible.